What if I told you that most people will work for money their entire lives, but only a few will ever make money work for them? The difference? It all comes down to how you understand, grow, and invest your wealth. Some people grind for decades, only to realize too late that they've been playing the wrong financial game. But others? They crack the code, build passive income streams, and eventually reach a point where their investments pay for their lifestyle. So, which side do you want to be on? In this video, we're diving deep into the proven strategies that can help you break free from the paycheck to paycheck cycle and start building real, lasting wealth. Stay with me because, by the end of this video, you'll have a clear roadmap to making your money work for you, so you can stop working for money. Let's get started. Hi everyone, welcome to another video. Before we dive into the strategies that will help you build lasting wealth, let me share a powerful story that conveys an important lesson about money. A man once sold his car to buy a gold watch, which he hid in a secret compartment in his desk. Every morning, he would admire his treasure, feeling like the richest man in the world. One day, a colleague noticed his daily ritual and decided to spy on him. Eventually, the colleague discovered the hidden watch and stole it. When the owner realized his watch was gone, he was devastated, filled with anger and regret. Another colleague, seeing his distress, offered an unexpected perspective. Why not replace it with a fake watch and continue as before? You never wore it or used it, so it was as if you never really had it. This story reveals a fundamental truth: money is a tool, not the goal itself. While saving is important, hoarding wealth without purpose can backfire. Money should be used wisely, to save, spend, and invest. Simply holding onto it without a strategy can lead to loss or missed opportunities. But before we talk about making your money grow, let's address the starting point: your job. Everyone dreams of quitting their job and living off investments, but the reality is, your job is the foundation of your financial journey. Before you can invest, you need to earn. Think of your job as the engine that fuels your financial growth. Instead of jumping into risky investments or get-rich-quick schemes, focus on increasing your income, upskilling, and managing your money wisely. The wealthiest investors started by securing a solid income source before multiplying their wealth. Financial freedom isn't a lucky break, it's a well-planned strategy that begins with financial discipline in your job. Of course, making money is just the first step. The real game changer is what you do with it. Imagine a life where your bills are covered without needing a paycheck. That's the power of saving and investing. Financial independence starts with consistently saving a significant portion of your income and putting it into income-generating assets. These can be dividend stocks, rental properties, or bonds, anything that makes money while you sleep. The key is consistency. A great example is dividend stocks, where you earn a share of company profits regularly. Over time, reinvesting those dividends compounds your wealth. It's not about how much you make, but how much you keep and invest that determines your financial future. But be careful, not all investments are created equal. Do you want long-term wealth or quick, risky gains? Understanding the difference between investing and speculating is crucial. Investing is about putting money into assets like index funds, real estate, or dividend stocks that grow over the years. Speculating, on the other hand, is betting on short-term price movements, like day trading stocks or cryptocurrency. While speculating can bring quick wins, it's high risk and often leads to financial losses. Smart investors focus on long-term, steady growth instead of gambling on short-term trends. To build real wealth, prioritize investments that generate consistent returns and secure your financial stability. Many individuals fall into the speculation trap, hoping to become rich overnight. Speculation is like gambling: it can be exciting, but it's dangerous. Many people invest in hype without understanding the risks. Even successful investors like Elon Musk have experienced major losses. Tesla lost over $14 billion in the 2021 crypto crash. Warren Buffett's golden rule of investing is, never lose money. And never forget rule number 1. If you enjoy high-risk investments, only use money you can afford to lose. The safest strategy? Invest in assets that grow steadily over time rather than trying to predict market swings. Don't let greed or FOMO make you reckless. Protect your hard-earned money. And speaking of protection, let's talk about securing your wealth. Many people assume their job or business will always be secure, but history proves otherwise. Kodak was once a photography giant, but its failure to adapt to digital trends led to bankruptcy in 2012. The lesson? Nothing is guaranteed, so financial security requires smart planning. Your income source today might not be reliable tomorrow. That's why having multiple income streams, investments, side businesses, or real estate, is essential. Instead of spending everything, focus on growing and protecting your wealth. Economic downturns happen, but those who plan ahead thrive while others struggle. A common mistake people make when investing is trying to predict the market. No one can predict the market, not even experts. Many investors think they can outsmart trends, but the market ultimately decides winners and losers. Alice, a confident investor, ignored expert warnings and went all in on a risky stock. When the market crashed, she lost everything. The takeaway? Instead of trying to outguess the market, invest in diversified assets with long-term potential. Trends will come and go, but the best investors stay patient, trust the process, and avoid emotional decision-making. Play the long game, and let time work in your favor. At the end of the day, your financial future is in your hands. When it comes to money, don't blindly follow advice from social media, TV, or even well-meaning relatives. Many people spread financial myths without understanding the facts. If you want to build wealth, take charge of your financial education. Read finance books, follow credible experts, and study successful investors. Knowledge is power. It helps you spot opportunities, avoid scams, and make smart money moves. Financial freedom isn't about luck, it's about making informed decisions that align with your goals. The more you learn, the better you'll manage your money and grow your wealth. Just look at Terry Igemma, a former assistant principal who took control of her finances. She wanted financial freedom, so she started stock trading on the side. Through self-education and persistence, she refined her strategy and, in 2017, made $300,000 in 1 year, enough to quit her job and trade full-time. But she didn't stop there. She launched an online course, Trade and Travel, and turned it into a multi-million-dollar business. Her story proves that self-education and determination can completely transform your financial future. But remember, no one will ever care about your money as much as you do. Many people trust financial advisors blindly, only to realize later they were misled. While it's okay to seek guidance, never give up full control. Learn how to manage your money, track your investments, and understand financial markets. Even in business, knowing your numbers is essential. Imagine trusting someone with your finances only to find out they've made costly mistakes. Take ownership of your financial destiny because, in the end, your wealth is your responsibility. And finally, beware of shortcuts. The internet is filled with flashy promises of overnight success, but here's the truth: if it sounds too good to be true, it probably is. Many people lose money chasing trending investments or fake guru courses that promise millions. Instead of falling for hype, focus on proven financial strategies. Wealth isn't built overnight, it's created through smart investments, patience, and discipline. Before investing in anything, ask yourself, does this align with long-term wealth-building principles? If the answer is no, walk away. Growing wealth is one thing, keeping it is another. Many people lose their fortunes because they don't verify their investments. We've seen this time and time again. During the dot-com bubble, investors poured millions into overvalued startups, only to see them crash overnight. In the luxury world, fraudster Rudy Kurniawan sold fake wines, scamming collectors out of millions. These examples prove an important lesson: making money is just the first step, protecting it is just as crucial. So how can you avoid falling into these traps? The answer is simple: always do your research before investing, consult trusted financial experts, and never put money into something you don't fully understand. Wealth isn't just about growing, it's about safeguarding what you've built for the long run. But while protecting what you have is crucial, knowing how to use financial tools wisely is just as important. One of the biggest financial tools that can either build or break your wealth is debt. Debt isn't always bad. In fact, when used strategically, it can be a powerful asset. Good debt, like borrowing to invest in a business or real estate, helps you generate income and build long-term wealth. On the other hand, bad debt, like financing a car that depreciates in value, keeps you trapped in financial stress. So before taking on any debt, ask yourself, will this debt help me grow financially, or will it become a liability? Making borrowing decisions that work in your favor is key to long-term financial stability. And when it comes to financial stability, there's one golden rule that every smart investor follows: never put all your eggs in one basket. If all your money is in one investment, you're playing a dangerous game. History has shown us this time and time again. Think about the dot-com crash. Investors who bet everything on tech stocks lost everything. The solution? Spread your money across different asset classes: stocks, bonds, real estate, and even precious metals. That way, if one market crashes, you don't lose everything. Diversification isn't just a strategy, it's your safety net in an unpredictable financial world. But even the best investment strategies won't help if you're constantly draining your money on unnecessary expenses. You might think that investing is the only way to build wealth, but do you know what's just as important? Not wasting money. Overspending and lifestyle inflation are silent killers of financial growth. The small, unnecessary expenses add up over time. Think about it, that extra $200 on dining out every month? That's $2,400 a year, money that could have been invested. The truth is, the key to wealth isn't just making more, it's keeping more. Being mindful of where your money goes can make all the difference. And speaking of keeping more, there's one strategy that wealthy people use that many overlook: understanding tax benefits. One of the biggest secrets of the rich? They don't just focus on making money, they focus on keeping it. Learning how to legally reduce your tax burden can save you thousands. For example, mortgage interest deductions and tax-efficient investment accounts like IRAs can lower your taxable income, allowing you to retain more of your hard-earned money. So if you want to maximize your wealth, take advantage of tax strategies that work in your favor. At the end of the day, building financial freedom isn't about luck, it's about making smart decisions, staying disciplined, and thinking long-term. The difference between those who struggle and those who thrive is how well they apply these principles. So which of these strategies resonated with you the most? Let me know in the comments. And if you found value in this video, hit the like button, subscribe for more financial insights, and share this with someone who needs to hear it. Thanks for watching, and see you in the next one.